Good morning and welcome to Equity Story Trade Watch, Wednesday, the 15th of February. I'm here with Claude. It's our midweek Ask the Analyst, not midweek Trade Watch, where we normally talk about fundamentals more than anything else, although we do look at some charts to appease the gods out there. Claude, welcome. Today we're going to talk about our normal things, that is just the announcements in the morning, but also we're going to go through, predominantly me, because you are a little bit sitting back with your thought of the week, with nothing's really impressed you, because the topic today is what has impressed you so far, and you're sort of holding back, which is fine. There's plenty of weeks to go. We're going to probably do this again next week and the following week to see if there's anything that impressed you. I've got one, and I'm going to talk actually about two stories I'm going to talk about, but one that's I'm really long-term for me. I'm just going to sit there and see what happens, right? And I know you've got a very soft spot for it, but we'll talk about it in a sec. Before we get on to everything else, quickly, there's a disclaimer in front of you. Everything we talk about this morning is general nature only, general advice. So every stock we talk about, it's basically based on fundamentals and technicals only. All right, now, before I get on and we talk about the announcements, last night, of course, we were waiting for those CPI numbers, Claude. And it was sort of mixed, because it mixed expectations, but it was below what the previous reading was. So I think the markets were like, not sure what to do here. And there's also mixed commentary from the Fed as well, where one saying, yeah, we're still going to have to go for longer with interest rate, but another one saying probably another 2 or 3, that's it. So, there's markets were up and down last night as well. So I think it's one of those, not sure, probably next couple of days, we'll probably decide where we're going to go from here. So we'll see what happens. Obviously, we just got to wait and see how it plays out. It is at least good that inflation is inching downwards. So that's the good thing. All right, moving back to us. Let's start with, and I'm going to change the screens, of course, so we can see the charts that I normally put on. And there you go, right there. So let's start with some announcement, Claude. And if you've got something to say, jump in, please. Let's start with last night's CPU numbers. I'm not sure if you've seen any of these or not, but like I said, if you've got any tidbits of information, please let me know. The chart, first of all, doesn't look great. It was starting to inch back itself up above the trend lines. Market reaction is quite negative. I'm not sure if I had a quick look, right? So for me, the key thing of it, I think what they were saying was they reiterated the guidance and they're going to be up 90% on the EPS from last year, which seems phenomenal, right? 90% jump in EPS from one year to the next. Yet the market's not liking this. So tell me, is there anything you think is there anything there, or you don't follow the story?
I haven't looked at these results, so I do follow it, but it's just, as you know, just been super busy. It's like the earnings season started the last couple of days. I do know, looking into the prior to results, I looked at them and basically thought, yeah, this is going to be good earnings coming up. But at the same time, that's probably already priced in. So my first guess would be the simplest, that just the results were already priced in. And if I was in this as a long-term hold, I don't think there's anything that invalidates the thesis in a single set of results, but I'd have to read it to check that there wasn't some terrible red flag that's been in there. So yeah, can't really comment on the results for that. But at the same time, yeah, just seeing it slightly down wouldn't be the biggest surprise, given it was definitely priced for a strong increase. As a long-term blue chip stock, it has the attraction of doing well when interest rates go higher. So that's kind of what's been giving it momentum lately. And maybe now that there's some thoughts that inflation's coming down, it could actually be that the CPI number having an effect on this one as well. It's pretty rate sensitive, although I wouldn't know why that is, since that came in above expectations. So you would have thought that would be good for them.
Look, I'm perplexed. So let's leave that one alone for the moment. We'll see. The market reactions, down 3% below the trend line. So we're not touching it. We're going to wait till the week, see what happens there. Next one, CBA again. Headline numbers look good, but market reaction savage this morning. Look at that, down 5%. Again, I don't follow the story, but
thank God
the market's been pretty hard this morning.
My father-in-law was 100% invested in CBA when I first met him, and I convinced him of another way, but as a result of that, his portfolio performance gets compared to CBA, which is what it was otherwise going to be.
Okay,
So if
so not a good day for him today then.
no, it's good for him today because he sold out of it completely
Ah,
a long
okay, that's
time
all right
ago.
then.
So
That's
if
okay.
CBA goes down, then that means like he's like, oh yeah, good stuff, Claude. You were right to tell me not to diversify away from that.
Oh, fair enough. Look, obviously, probably Premier Bank. Again, it'd be interesting to see the finer details of this. We don't follow the story. I'm just always intrigued in the market reaction to some of these things. I know I saw the profit was actually down. I know the cash profit was up. The actual underlying profit was down. So, there's lots of dynamics going on here. Again,
so I think it's a bit of a story of sort of provisions up, but obviously net interest margins actually up as well. So at the moment, still not too bad an environment for Commonwealth Bank, but could get worse, I suppose. But either way, like I wouldn't have a strong feeling either way about it.
No, it's just a bag for me as well. I agree. I mean, it's just you should be okay with it if you're in it. All right, now SVW. Now this is a very good chart here, I have to say. The results, while not tearing everything apart, they were actually decent. So about 10% growth, 11% growth. But what is interesting here, Claude, and again, me briefly flicking through because there's so many announcements this morning, was the fact that there was an upgrade to its guidance, which was the key here. That's why it's looking up and possibly could retest at $24. So this one is definitely one on the radar as a trade if you're not in this already. But it needs to probably get through this real 24 resistance. So wouldn't be touching it right at the moment. On your watch list, the end of the week, the results were good. Upgrades are always great on a trade if you've got that little bit of a longer term view. So watch for that one. Well, again, I will return it. I'm going to mark it to return back to it the end of the week. Next one, FBU. Now, I think the market, again, wasn't quite, or was it? Let me have a look. This morning was sort of up and down a little bit. It's up. Let me see. Fletcher Building today. Is it up?
Yeah, so it put out
2%. It's not too bad.
Yeah, so just 2 days ago, it put out its guidance, and then I'm pretty sure today it confirmed its results and dividends. So it's put out actual results today, just 2 days after the guidance there.
Fair enough. So nothing really
or is it even the results? It's such a weird way to report. Yeah, it is the results, but there's no actual annual half-year report that I see. It's just a presentation. So I guess it's all in there.
Aren't they on a different?
Oh yeah, it is. It's after the presentation, actually. Yeah, it's there.
All right, fair enough.
Yeah, look, so honestly, just this one, as I think I mentioned it to you the other day, Peter, just to sound you out on it. I like it just because it's just so such low expectations in the share price. Like the market's not really pricing these guys in to do great. And to be quite frank, things aren't brilliant for them in New Zealand. They've got they've got some pretty bad contracts there. The New Zealand housing market's taken a hit, and that's what they're pinning their hopes to a lot. So things don't look that great, but it's like at some time in the future when things are looking better for these guys, it'll be a higher multiple. That's my argument.
Oh yeah, look, it's cyclical, right? So things will improve and they'll do okay, and they'll probably get back to that $7 again, right? That's how they work.
Yeah, you can never be guaranteed that things will improve, but even if things just don't get worse, you're going to be all right with these guys.
Oh, I'm an eternal optimist, Claude. I think things will improve eventually. It could take a bit of time.
I have been seriously considering this stock, put it that way.
Fair enough. Look, for me, below trend for the moment, I think, technically speaking, you certainly would not be touching this at the moment.
Dave put me on the spot for a dividend stock last night. This would be actually a good one that I could have said.
Oh, okay, fair enough. And look, as a dividend stock, not bad. As long as they can maintain that sort of dividend through that period of good and bad, then I suppose no problems whatsoever with this.
You've just got to remember, as Dave says, turnaround investing is miserable.
It can be difficult, but you know what, Claude? the best time to buy these cyclical stocks is on the bottom, right? With a good dividends. Because
exactly.
That's where you're probably going to make the best returns.
The price of admission is it's miserable. That's what you're going to pay.
Exactly.
Your soul.
So as a dividend story, this is probably what I'll be looking at. It'll be looking at the cyclical lows, if you like that sort of business. As long as it's not.
There's always spot for a few dividend stocks in my portfolio. I don't mind them at all.
All right, let's move on to the next one, and it's Wesfarmers, another big one that reported today. Now, there's some good, there's some bad, and there's some ugly stuff in there. I think overall it's looking okay on the charts, which is good. So it's up to 2.2%. The ugly wasn't too much in there, so that's probably why the market's actually quite positive on this. The ugly for me was Catch Group, which was just terrible. The bad was there's a blowout in getting the lithium hydroxide out. So that's going to be like a 6-month delay because they are developing their lithium Mount Holland project. But the good stuff was actually very good. So we've got API looking pretty good that they acquired recently. The other business is going quite well. Kmart's doing all right, which has always been a hot topic. So generally speaking, I think Wesfarmers is a great operator. I've got to give them that. They've got so many businesses and they seem to have put it all together and worked them pretty hard, and they're coming up with some decent results. So for me, if I'm ever going to be owning a big story in a portfolio, normally I try to stay away from them. I'm more like you, Claude. I prefer the smaller caps, but this is definitely one out there that I would probably consider owning for a long period of time, because first of all, the returns, if you look at the 10-year chart, it's pretty good, right? So maybe the last 5 years wasn't great, but the last 3 years was pretty good. So if you take the long-term view, really long-term view, like 10 years, it'd probably be okay. And this and dividends as well, about 4% odd. So all in all, not bad as a big story in your portfolio if you're going to go down that route. All right, let's move on to the next one. CTD. I know you want to quickly just say something about that one. I don't really follow it, so go ahead, please.
Look, it's not one that I love, so it's not one that I know like the back of my hand. But I think that the typical criticism of this stock is show me the money. And I don't know how easy it is for you to actually get that cash flow statement up on your screen, but I can read out the key point here is that these guys are saying, we've made a $15 million profit, $15.6 million profit for the half. So that's great for them to see, or just call it 16 actually. But that's great for them to see back into profitability. Obviously, their corporate travel management, they're doing a lot of travel booking. They were affected by lockdowns. Now that they're coming back. So that's nice to see. Of course, that was already priced in. But just the typical criticism of their results, which just, for me, it just makes it such an unattractive long-term holding that I just wouldn't have faith in. And that is, of course, the cash flows from operating activities. Receipts from customers being 233 million. That's down on the prior corresponding period. And net cash from operating activities, just 400K, 440K. So just almost nothing there. And then, of course, just typical of this company, 14.1 million payments of intangibles. Like, that is just wild. That's up from 9.6 in the prior corresponding period. Like, this is not even a high-tech business. I'm looking at Pro Medicus. They've done something like 3.9 million in capitalized software development costs. When you capitalize these costs, by the way, if you're listening, it takes them out of the profit loss. So it doesn't make your free cash flow any better, but it does make your statutory profit better. So Pro Medicus reduced the amount it was capitalizing doing that in this half, which I obviously own shares in Pro Medicus, but everything looks bad compared to their actual results. But this again, I can't believe people love this company so much when it's always got the cash flow all over the place. Now, of course, that is supposed to return to an improved status in the next half. So that's what we'd be looking for. And that may well happen. I'm not saying this is a terrible company either, but it's not brilliant in terms of that cash conversion. It's a bit of a fail for me.
All right, market's not impressed. Down 1.5%. I think
but the market's also, the crazy thing is that I can't believe that how well this stock has done over the years. Like, if you want to look at the financials, you're
It's a
never going to
roll-up.
see.
It's a roll-up clause. Probably
Yeah,
the reason why it's probably been doing well is because they've just been adding
but
it.
it's the amazing. I can't believe how well it's done as a roll-up. You know, usually roll-ups, they have a run that's like usually at the beginning and it works well, and then they just fall over. Even though they're well off their highs, as you're pointing out on the charts, it still amazes me the valuation they get.
But I think the market's starting to see the picture here that it is risky. The roll-ups are not make the same impact as they used to be, right? So you can see that the chart's starting to roll over pretty much over the last 2 years. And
so back in the day when I'm not short any stocks, don't have any short positions in any stocks, just it's too hard. You can't talk about them if you do, basically is the gist of it. So that's why I don't. But like, you know, this is, if I was one day when I retire from this game, Peter, I'll be shorting stuff like this, I reckon.
Fair enough. All right, let's move on to the next one because we've still got a few to get through. Just quickly on TWE.
People should never short though, by the way. It's a terrible idea.
It's just too difficult. Anyway.
Never do it.
6% down TWE. I think it's take some profits off the table. Look, the announcement looked good on paper. The problem was there was no top line growth. So I think 1% sales growth. And hopefully with China opening up, they can send much more wine back to China again and grow that top line. So the impressive stuff was the cost cutting and everything else that they've trying to obviously squeeze out on the bottom line. And for me, you know, I think at the end of the day, it's not cheap. And it had a good run. Market's just not quite impressed. They probably wanted more, and maybe that's what the problem is here. Let's come back to the trend lines. You just, you know, don't panic here. Wait to see how it finishes at the end of the week if you're in this trading this. And yeah, we'll take it from there. So we'll look at it on Friday. Next one is Cochlear. I think market, let me see, up today 6%. So the market's actually taken to this quite positively this morning. Claude, I don't follow the story. To me, it's X growth, right? It used to have that really good, fantastic growth results for a number of years. Now it's come down to the single digits almost. So it doesn't have the same impact as it used to have. So the valuation is now trying to catch up to the actual growth it's showing. So for me, I'd have to look at the announcement why it's jumped up so much at 5%. Because the chart actually looks quite decent. So maybe there's a trade here at the end of the week. So I'm going to mark this to have a look at the end of the week and see where we are at. Do you know anything about this one? If not, I'll just move on to the next one.
Yeah, we can move on just to quality blue chip. I haven't been able to look at the results beyond the headlines. The headlines didn't look great for me. So I'd find the CSL idea more compelling just based on what little I know from the results. But I haven't done either of them closely. So
all right, VCX.
The research required.
Fair enough. Thank you. VCX. So they've come up with their results. Price is jumping beautifully. They're up 5%. And I think that's on a back of an upgrade in this space where we've seen big sell-off, right? With the interest rate rises here in Australia looking longer because of the inflation. So there's a sell-off. Now there's a bounce. So what do you do with these sort of stocks? You sit. If you're in this, you sit, you don't panic. Especially if it's above the trend line, right? So if you're in this for a dividend, you're probably sitting there and just waiting to see how it goes. Again, we're going to wait till the end of the week, but I think it's probably going to go sideways for me anyway. Next one, and this one's for you. I know you're in love with this one, so let's go through it. Go on, tell me about PME.
Yeah, so I've been hanging out to get into the guts of their reports. Obviously, you know, I've been making the case for 10 years now that this is the highest quality business on the ASX. You can see articles I wrote for Motley Fool saying, you know, my favorite stock on the ASX is Pro Medicus 10 years ago. And these results again prove that if you just take aside the valuation, this is the best quality business on the ASX. Again, they have more integrity than just virtually anybody else. You know, the first thing they're saying in their results discussion is, well, guys, you know, I know our profit went up 30%, but actually, if you back out the fact that we got some currency and hedging free kicks there, it would have only been 23%. So it is worth noting, if you are just looking at the 30% growth rate, really they're saying the underlying growth rate's only 23% there of the profit. And obviously revenue, on the underlying basis, again, that the real statutory is higher, but they're saying take out the free kick we got from the currency, it would have been up 19.4%. So they're still getting that nice operating leverage coming through. Obviously, the days of mega massive operating leverage are now behind us, just because it's got more scale now. And the other thing you got to keep in mind with these guys is, even though, by the way, I haven't finished going over this, and I'm going to have more thoughts on this, and I'll write an article about it. And every year it's our most read article is my results coverage of Pro Medicus. But essentially, the cash flow wasn't quite as good as it was in the first half last year. Something to keep in mind. Free cash flow can fluctuate a little bit as receivables and payables tend to move around. Wouldn't be surprised if there's a question about that on the conference call. We did see a big increase of receivables, up 13 million, almost 50%. So I think that if someone wanted to attack this result, that'd be where you'd attack it. However, my memory with these guys is long, and they have had build-up of receivables before. And guess what? Those receivables get paid out because they provide a essential tech backbone for their customers. And it's not really an option to just not pay them, because eventually they'll turn it off. So they've, of course, never even got to threatening to turn it off before. But sometimes you just see in a certain half their receivables build up. That's what we've seen here. That's the biggest negative I've seen so far. Obviously, I'll be trying to find those negatives for the next few hours, and sometimes they're harder to find. But generally speaking, you can trust these guys to tell you what's going on, including the negatives. And these results look very good. We're still seeing good, strong half-on-half growth in the USA, which is their largest market. 17.7% half-on-half revenue growth there. So that's a strong little growth engine there. And that's the half-on-half. Previously, when I was talking about the growth rates, overall growth rates, I was talking about versus prior corresponding period. But within the business, that US business is still going faster than the overall business, which is nice to see. So overall, big tick for me on the results. Of course, I do own shares, and of course, the valuation, from my perspective, can't be justified using a spreadsheet. P ratio of well over 100 there.
So two things there, Claude. First of all, I mean, extraordinary. A company with 50 something million in revenues can make a profit of almost 30 million bucks, right? You don't see that very often, so that's why this is such a quality business. And you see so many stocks here in Australia, 200 million revenues and loss making still. So it's obviously that's why you love it so much, and I can understand. But so the question is for me at the end of the day, would you be buying this on this result at these prices? No,
I just can't. I can't buy it right now just because you have to put in some heroic assumptions about how long the growth lasts in order to justify the current share price. However, having said that, I've sold so much of my shareholding of this over the years. If I just held all my original shareholding right now, I wouldn't be talking to you now, Peter. I'd be genuinely retired.
I know, you'd be on an island somewhere sipping pina coladas.
At the same time, like, I've kind of got down to the point now where I'm like, I'm just going to hold on to this one. You can hardly find a better quality company on the ASX. If I sell shares and divest, then the overall quality of my portfolio is going to go down. And there is still one potential upside that could happen over the long term, which is that they are in, I would argue, the best position of any company. Not saying it's guaranteed, but they've got a chance that they really become a platform on which AI radiology algorithms are operated, which I hope they're moving towards being able to clip the ticket on the use of those algorithms, even if they're developed by other people. And you can imagine one successful AI algorithm could just get, if it makes economic sense, it just saves time, it saves lives, it can get rolled out to every single scan, basically. So you might be clipping a tiny cut of the ticket every time it's used, but it's just going to get used like a lot. So let's see if that plays out, because that's probably what we need to happen. If we want to have great returns from here, we need that to happen, probably.
All right. Look, I love the story too. Don't get me wrong. I wish I could just pick it up at $20.
Yeah.
It'll never happen. Dreamy.
The last time I bought was like mid-30s.
Okay. Well, that was good.
But then I was selling out over 50. I took profits over 50, and now it's like almost 70. So yeah, it teaches me again.
Fair enough. Well, there's a lesson for all of us. keep your bloody best stocks forever and a day if they keep delivering.
Yeah, I mean, that would have been amazing for me if I just held on to it hard. Then it would have been like, oh, wow, I just did one good thing at the beginning of my career and then I was done. But anyway,
Yeah.
shucks.
That's the story for all of us.
Yeah.
I remember, Claude, I loved realestate.com. I bought it at $2.50 back in the day.
Yeah, right.
And I made some profit. I'm like, what a hero I am. So this is such a quality story. I can see the tech really being good. And this is like way the early days of tech. And I thought, this is a great company. There you go. I know it's conviction. It's sticking to your bloody convictions is very difficult.
So now I won't, like, now I have a bit more money. I don't need to sell a stock to buy a new stock. So I can just keep my stuff if I want.
All right. Let's go to the thought of the week. So the idea was have a look through some of these announcements that we've had the last couple of weeks. I know there hasn't been too many yet. Hence, maybe you're struggling a little bit because you like the smaller side of things, but you're going to talk about something anyway. So let me start off first, and I'm going to talk about carsales.com. So this one really impressed me, and I'll tell you why it impressed me and why everyone should be looking at this as a potential buy. So I've got the presentation in front of you. So first of all, this is not a ball-tearing type company. It's going to come out with 50% growth, 30% growth like your PMEs, but it's a quality stock nonetheless. The reason why first of all, it's a monopoly here in Australia, really. There's no one else that comes in close to them, but they've also got #1 positions all over the shop, and that's overseas. Now, the other thing is that was quite interesting is that acquisition in America, the Trading Interactive, for me, looks like a winner at this early stage, which, the American market is huge. It's not in a car space, but it's in the other sell, I think, the tools and everything else. So it's interesting from the fact that they sort of spread out a little bit, but the US is the big market, and I'll show you something here that looks quite interesting. First of all, if you see, this is the actual numbers here. So they are #1 by quite a huge margin in Australia. NCAR, this is their Korean side of business they've got in NCAR in Korea. So 4 times traffic as the nearest competitor. Brazil, Web Motors, 1.6 times. So it's obviously not as dominant, but it's still #1, which is good. And this is the American one. This is the Trading Interactive. So it's almost 3 times more traffic to these guys than anyone else. So for me, I love seeing a company that's got that on its books. You know that this is quality. You know that this is usually fairly resilient compared to some other stuff. And usually has got a pretty strong moat around it as a result. And it's very difficult for #2, #3 to catch up in any way. We've seen it many times, many different examples of this. So just from that, it looks good, right? So they've delivered a pretty good result anyway. But what is interesting for me, and this is why I think you should be buying, even though these prices, current prices, is they're talking about their outlook here. So statements, we expect to deliver good growth, right, in FY23. So that's good. Actual basis, we expect to deliver very strong growth. So you've got to like that language, first of all. So we also expect to see expansion in the Carsales Group adjusted EBITDA margin on both pro forma and actual basis. So this is all good words here, Claude. I really like what they're talking about, right, from a investor point of view. And then if you go through the Carsales Australia observations, international observations, again, looks very good. So let's go to international, because I think Australia should be pretty good. But Korea, expect strong growth. Excellent. Brazil, expect strong growth in revenue, EBITDA. Fantastic. Now, this is a new one that's obviously I'm always interested to see how they bed this down, how they're going to work with this Trading Interactive. We expect good growth in revenue and strong growth in adjusted EBITDA in FY23. Positive momentum in January and February. This is the key for me, that they are on the right track. Looking good so far. I'm really liking this company. Delivered pretty good. I'll put the chart up so you guys can see. But if you don't have a company in the tech space like our very own version of Fangs, I'd probably put it very close to the Fangs business, Carsales, because of its dominant market power. So let me have a quick look at the charts, and that's the other reason that I'd be buying this, or at least accumulating. You can see it's above trend. It's come back. It's bouncing off. It's now trying to obviously get back up to that 24 and below. It's trading at about 32 times. I had a look at the numbers. It's trading about 32 times. If they keep delivering that between 10 and 20% growth, Obviously, that's going to drop down over time. Like I said, he probably deserves a premium because of its market dominant position and its growth overseas. So I'm happy to pay around 30 times for this business. So yeah, like I said, any weakness, I'm accumulating long-term hold portfolio. So that's one. The second one I quickly want to mention, and this is not as, I suppose the result wasn't as brilliant for me, but I'm thinking these guys are poised. So CSL for me, right? So the result at least give me some confidence that better things are ahead. So first of all, the collection, the blood plasma collection was very, very strong. This is the key illusion the metric one looks at when looking at CSL. That was about 30% up. But what is interesting here is that the commentary from a lot of the people that follow the story is in a times of tough, when the times are tough, usually people go and sell the blood to make extra cash, right, on the side. So we're almost like heading down that direction, right? So possibly if you look at the next 6 to 12 months, we could see the situation where that actually starts looking even better from the blood plasma collection. So for me, this is definitely a story one should look at long-term. Again, probably another one of those worst farmers. If I'm ever going to have big stocks, CSL, West Farmers will probably be up there of the two. So I'm just looking forward to see how it goes. But that was impressive from the fact of that plasma collection, that the actual is much better than it was pre-pandemic, which is saying something. So looking pretty good. But anyway, I think car sales for me is the one that I'd be looking at for sure. All right, Claude, what have you got for us? Thought of the week.
Well, I'm going to have to go to Audinate, which reported yesterday, because that's like the high quality business that I've really gotten across the results of. And look, at the end of the day, Audinate is it's a high quality business in the making. We talk about the past success and stuff, but whether it's they don't all become a massive success, but whether it's Objective Corp, Pro Medicus, Nearmap, which has now taken over. Once upon a time, these guys all look like, closer to break even or less profitable. And, they're much more volatile and you can be less sure because they haven't really done it yet. They haven't really proved their high margin. And look, Audinate's a tough business in a way, and it's nowhere near a perfect software company because every time it sells a bit of software, that's encapsulated in well, not every time, but almost every time it's like a chip or a card or a module. So they do have some software that, is cloud software like Dante Domain Manager. I mean, that's small though. So although growing, that will gradually improve the margins over time, but it's not going to be the story here. The story is they have to keep selling the chips, cards, and modules, which relies on, ultimately the surveillance and communication systems that are built into modern buildings and renovated buildings and stuff like that. So that's what they're about. They're into video to get even more into that as well. Look, the key point here is the bad news out of this result really was that due to supply constraints, etc., the actual number of chips, cards, and modules they sold in the first half was down 10%. However, the silver lining in that cloud almost just completely overwhelms the cloud, because the silver lining is their revenue is still up strongly, partly because of the acquisition of Silex Systems, but also partly because they put up prices. So overall, their gross margin actually went down because of the much lower margin Silex business that they put in. So that's probably a bad optic. But again, none of this goes to the key point, which is that they continue to be the absolute dominant protocol for audio networking. And these results where revenue's up, and despite unit sales being down, that just shows their strength. And that's the best proof yet we've got of their strength in terms of their market positioning. So that's really positive there. So why I like Audinate right now is because as the quantitative numbers that they've reported flow through, I think that they won't look that good. They're not going to pass that well. The reason they won't pass that well is because gross profit is down. That is not something you look for. We're just talking about Pro Medicus' insane margins. You don't get insane margins if your gross margins are trending down, okay? It's just not going to happen. So you don't want to see that. Diversification into this Silex business, which has reduced their margins. That's not a good look. The revenue growth is very strong. That is a good look. That's the thing that the market's focused on with the results. And why not? It is a record revenue result. So that's great. Also, the fallacious part of it, which I don't think the market is very focused on, but is something that might have fooled some people, is that the loss reduced from 2 million to just 400K. So that looks like operating leverage, but really that's just increasing the amount of capitalized R&D. So I'll throw that out the window, and people are going to realize that as well. So I don't think that's going to hold much weight. Basically where we are right now is that I'm guessing that in the second half, the revenue growth rate will be a little bit lower because they're not going to get the full benefit of the Silex revenues, because there would have been some in the prior corresponding period. It's not a brilliant setup right now, but if the share price does come down a little bit, I think it's still you can do this as a long-term buy or whatever, because ultimately what happened is I've got a million little things that I think were kind of unimpressive about these results, but they're still consistent with the long-term thing that this is a quality business in the making. So I'm looking for any weakness as the market digests these particular results. That's something that I'm willing to bear. And also the other thing you got to remember is I think FY 2024 might be the year to own them next year. So because the reason for that is on the conference call, the CEO basically pointed to analyst forecasts saying that it's going to reach cash flow positive or break even within the FY 2024 year. So that doesn't imply FY 2024 will necessarily be profitable and cash flow positive, but it does imply that he thinks FY 2025 will be cash flow and positive. So there's still a little while to pay out, but you probably want to own by then. I already own, but I probably want to build up my position a little bit in the next couple of years, because I think maybe in the latter half of this decade is where Audinate shines.
I think I agree with your commentary on AD8. And I think absolutely quality business. Again, I love companies that dominate its market, and that gives them pricing power. Like you said, they can just lift prices and without too much hassle. And yeah, look, if they play the cards right, things turn slightly. In other words, they get more access to some of these chips and everything else. This could be flying next year. Like, absolutely right. I agree. I think this is something that has to be probably put on a radar and have a look at, and possibly accumulate on any weakness really at this stage, because while I could see what you saw in those results, there was some good, there was some maybe, you can question stuff, but generally speaking, the direction they're going is pretty good. So I'm happy overall.
Nice, yeah.
All right, that pretty much does it for today, I think, Claude. So thank you very much for the thought of the day. Thought of the week. We've got a couple of very interesting stories in AD8 and car sales, and hopefully these guys can do us good and make.
They're the long-term quality kind of companies today that we talked about.
Absolutely.
CSL, car sales,
Absolutely.
and then Audinate is like the high-risk version of a long-term company.
I do have to mention, because you did tell me that car sales, that was your first ever recommendation for
Yeah.
All right.
Yeah, so way back when I started at Motley Fool, before I did small caps, that I did a couple of recommendations for their big share advisor service, and yeah, car sales was the one I went with.
Well, this is another one of those.
First ever recommendation.
Claude, this is another ones you should have bought and held on to them, just like
yeah,
PMA.
exactly.
What are you doing, mate?
Yeah.
Come on.
Yeah, the theory held with car sales. It's just a good quality business, but
we'll let you
I
off.
still
I
think
think
that's
coming
the
up
case.
with some good ideas, so we'll let you off, but hold on to them, please.
Yeah, well, exactly. And sometimes it's an easier place to hide in these larger cap ones that are like super profitable already, like rather than say the Audinate, which isn't quite there yet. And so you're sort of speculating, but then that's where you get a bigger uplift in the small caps, because if Audinate does make that transition from it looks like it's going to be good, but isn't it, to actually know, guys, like this is genuinely gushing the profits now, that's when you get that uplift.
But Claude, this is how you take the punt on PMEs, right? Early days, you can see the quality emerging and you just go for it, right? And you just have to have conviction in your own research. I mean, that's the whole idea of us looking at some of these stories earlier.
Yeah, it's the small cap world can be high risk, high reward. That's why I love it.
Exactly. All right. Thank you so much for joining me. Some good ideas today. I'll speak to you probably during the week, probably Friday. Have a great week, and see you again tomorrow, guys. Cheers.
See you, Peter. See you, everyone. Have a good day.
Thank you.